So Wall Street keeps on going up. The banks yesterday beat expectations. Bank of America was higher than expected. Morgan Stanley, Charles Schwab. And obviously, if you're a trader or a day trader or swing trader or generally just looking at investment, then banks would be a great sector to go into, especially as you have rising interest rates. And markets will continue rising all the way through to the end of 2023, in my opinion, quite simply because that's where they want to be. They are discounting any particular bad news and only going in one direction. Microsoft is reaching all-time highs. The tech sector is just pushing higher and higher and higher. The Nasdaq will probably go to something like 17,000 by the end of the year. Can expect Wall Street to be around about 35,700. S&P 4650. So the markets want to go higher. Analysts want to push it higher. Investment bankers want to push it higher. Hedge funds want to push it higher. They are going into a real get 2023 top of the market. However, as banks rise on the back of rising interest rates, it's general public or Joe Public, the man in the street, that is suffering. So when we scale it down all the way down to the small business is not benefiting from rising interest rates. As we all know, the small businessman and the homeowner or the mortgage holder is suffering from rising interest rates, and the central banks have a major part to play in this. What they've done effectively as raise rates too quickly over a short period of time, and the killing of small businesses. Small businesses turnover and volume of business is falling. And as a result of that, that's going to impact, obviously, not only on the turnover in the business, but obviously on property prices and on commercial loans. So today, for example, which is a buyer's market, if you're talking about property, your buyer could come in and knock off straight away 10% off the asking price. Good negotiator, probably get 15 to 18% off the asking price. Homeowners will become more desperate as the next 12, 18 months proceeds. Why? Because the higher interest rates will begin to impact on them as time goes on. And not everyone can afford their mortgage, especially when we're talking about mortgage rates doubling or even tripling in certain circumstances, going off an old rate and going on to a new rate, especially somewhere like the UK, where you have a 2-year fixed coming to an end, you have a 5-year fixed coming to an end, and those 2-year fixed and 5-year fixed were running at around about 1.99%, 2.3%, or 1.59%, whatever they are now. And now they're going to jump onto 6.63%, 6.4%, 5.95%, whatever the rates are. The rates are going to be much, much higher, and the average mortgage is obviously at least 2 times or 3 times where it was 3-4 years ago. So that's going to have a major impact, especially on those people who've just gone and bought property since 2018, 2019. They're going to feel the effect even more than the older or the longer established homeowners from 2010, 2012. Talking about financial markets, as I said, equity markets will continue rising. The Dow was up over 300 points yesterday on the back of above than expected earnings from the banking sector. That will continue. Interestingly enough, Estee Lauder, which I'm sure all the ladies know about, and maybe some of the men, depends on which side you're drifting to, their shares dropped because of sales in China on the cosmetics have fallen through the floor. So again, China comes up again, but no one's really paying attention to it. China was a massive consumer of Western goods, and slowly that will drift into the economy, the impact of China's slowdown and China not being the global or the major powerhouse that it was 3-4 years ago. It's descending. It is number 2 in the world. However, we do need China to be very, very strong if the West wants to benefit from sales in China. Obviously, that's not going to continue as we go forward. Looking at cryptos, Bitcoin, not really going anywhere. It's sort of stuck at the 30,000 It dropped below 30,000 yesterday, all the way down to 29,700, I think was the low of the day. Have to check that up on the graph. Interestingly enough, it seems to be a problem at 30,000. So those people who contacted me last week and said it's going to fall, well done, you got it right. I said it was going to go up to 35,000 in the near term, and they said no, at 32,000 is the top, and it's going to drop from there. They got it right, but anything to do with crypto is very binary. It's very up or down. It's very gambly. I can't really analyze the fundamentalists on that. Gold traders, gold jumped up yesterday. I said gold's going to head towards the $2,000 level, partly because of it, probably because of a cheap dollar. Remember, if it's a lower dollar, you're going to have it becomes more available gold in terms of price because it's priced in dollars. So a lower dollar would make gold go up. Gold did move up, and it looks like it's heading towards the $2,000 an ounce level. Those of you who are precious metal traders. That's more or less it. Can share, subscribe, comment. You can catch me also on Instagram and on TikTok. This will be broadcast across all the media. I'm looking for some feedback, whether it's positive, whether it's negative. Any type of feedback is always welcome. If you're a trader, then obviously you can DM me if you have any particular questions you have, etc., etc. Catch you later.